VintageGPT.com.
Welcome back, investors. Welcome to a new video on our YouTube channel. So this week we'll be analyzing the company Apple, and more specifically, and probably some of you have noticed that Warren Buffett has sold, so Berkshire Hathaway has sold a big portion of its Apple stake a couple of weeks ago. So we want to go a little bit deeper and analyze if, from what we can see, if Apple's growth is coming to an end or not, and explicitly answer that question at the end of the video. So, I don't think that I have to introduce Apple. Apple is still today the world's largest tech company. It has a market capitalization of around $3.5 trillion US. Before we move forward, do not forget to subscribe to our YouTube channel and also activate the bell that you get notified when we publish new videos. And also, as last week, and by the way, thank you for the person who has submitted the comment about Nestle. So the next video, so company analysis video, will be about Nestle. If you have companies that you're interested in, that you want us to analyze those companies from a financial perspective, but also with Vinge, feel free to submit any, let's say, proposals in the comment section of those videos, as we'll be looking at it. Right, and as always, of course, I'm sharing with you the Midjourney prompts. You get now used to this. So you see here are two photographies that I use Midjourney to generate those photographies. So you have those actually much smaller prompts than you're probably being used in seeing in those videos. Also as well, and I have to do this for legal reasons, I'm not a shareholder of Apple, and as always, reminding you that investing to the stock market comes with a risk that potentially you're going to be losing your money. This is also why we are teaching people not to leverage when they invest into the stock market, so not raising debt to invest into stock markets. So let's start first things first with the company. So giving you like a perspective on what Apple is actually still doing or doing today, in fact. So as I already said, Apple is still the world's largest tech company with a market cap of roughly $3.5 trillion US. We are early October 2024. And the company is headquartered in Cupertino in California and has been founded in 1976 by, you probably know, by Steve Jobs and Steve Wozniak. Those are the two most known founders of Apple Corporation. And the mission statement, and that's why I also put here the picture of, this is a specific course at the Reed College about calligraphy. So the mission statement of Apple has always been to bring the best user experience to its customers through innovative hardware, software, and services. We're going to cover the services part later on. But basically, I think what has differentiated Apple since many, many years compared to other, let's say, more traditional tech companies is that the products of Apple are beautiful. This is the reason why, in fact, calligraphy comes into the conversation, because Steve Jobs has undergone courses related to calligraphy. And calligraphy is about doing, let's say, writing in a very nice way. So he has learned beauty of writing actually through his calligraphy courses when he was at, I think it was at university when he did calligraphy courses. Very quickly on the history, I think, you can look this up also by yourself. I just wanted to come up like with a major milestone. So the company has been founded in 1976, April 1st, basically. And the company IPO'd, so they went to the stock market 4 years later, December 12th, 1980. And in the meantime, they had produced already the Apple I and the Apple II, which were, let's be very honest, a little bit ugly computers. I think where Apple really became so they moved actually into the radar of a lot of consumers was in 1984 with this famous advertising commercial that was run during the Super Bowl. For those who know Aldous Huxley book 1984, so it was actually a very iconic 1984 type of commercial, in fact, and that commercial was directed by Ridley Scott, which is today very well known in, I would say, around the world as a producer of movies. And also at that time, so they launched the Macintosh, which actually they popularized and made the world aware that actually interacting with a computer can be done through a graphical user interface and a mouse, which was not existing actually before. It was pure keyboard, in fact, and no graphical user interface. 1985, so there were a lot of power struggles. You may remember that Steve Jobs had to depart the company, and he went on and founded Next, which was another company. And so they brought in, I don't remember who it was, but they brought in a CEO who was coming from another industry. If I'm not mistaken, it was automotive industry, and it didn't work. And there was strong competition from the Microsoft PCs and IBM compatible PCs. And in 1996, so kind of 10 years later, Apple acquired Next, and they brought actually Steve Jobs back in as company advisor. And a couple of months later, a year later, actually Steve Jobs became ad interim the CEO of the company and restructured actually Apple as a company. What is funny, if I'm allowed to say it like this, is that Microsoft had invested $150 million into Apple, and that both companies agreed to collaborate on a certain amount of products. Still today, in fact, Office is one of the most sold products of Microsoft on the Apple ecosystem. And then 1998, I think what was, and you have the picture on the left-hand side at the bottom, is the launch of the iMac, which was again a all-in-one computer, very nice computer with very vivid colors. That was again something where you saw that Steve Jobs was focusing on the design of beautiful products versus the little bit boring PCs actually that we had at that time. 2001, so between 2001 and 2010, there were a lot of innovations that are still valid today. So they launched the iPod as a hardware device which converged into software, into Apple Music today. They launched the iTunes Store. They launched the iPhone. I mean, you go on YouTube video and have a look at the speech of Steve Jobs, where he's actually insisting that the iPhone is a phone, an iPod, and a web browser. The App Store appeared, which was making actually the app ecosystem, the Apple ecosystem, a real platform for third-party developers. The iPad 2010 came out. Then 2011, I mean, you know the story about Steve Jobs, so he had to resign because of health issues, and he passed away October 5th, which is actually, I mean, now kind of close to 13 years exactly ago. And Tim Cook, which is still today the CEO of Apple, actually took over as CEO of the company. Then you had other innovations like the Apple Watch. 2018, Apple became the first company to cross the 1 trillion market cap. And something which became pretty important, 2020, where in fact Apple decided to move away from Intel in terms of microprocessors and to build their own microprocessor, which you probably all know today as the M1, the M2, and the M3 microprocessor or chips, in fact. And then the last very strong innovation I believe that Apple came out, which actually I was very, let's say, positively surprised, was the Vision Pro, which is this spatial, what they call the first spatial computer, blending augmented reality with virtual reality. So the main products today is, of course, we're going to see this later on when we look at where the revenues are coming from, is very clearly the iPhone. That's their number one selling product, then followed by this whole Mac series, the iPads, and the services, let's say part of the revenue with things like Apple Music, the Apple Store, actually become pretty big in the meantime. And you're going to see actually how much revenue of the 100% total revenue of Apple is linked to the services part, which was kind of inexisting, let's say 15 years ago. The wearables as well, and any type of accessories. So probably in the accessories they're going to put the Vision Pro as well, but the wearables would be like the Apple Watch, for example, that are part of things, the how do you call them, the AirPods and the headsets that would be also part of the wearables and the accessories. So when we try to analyze, and again, we are value investors here. When we analyze the strengths or the moats, as we have learned from Warren Buffett, the moat of a company like Apple, you have to think about what is the core business of the company. And some people will say it's the ecosystem. That's true. The ecosystem actually locks in the customers. And I mean, when I'm teaching this, if it is in the business school or university, when I ask my students how much money I would need to pay them that they would switch away from an Apple iPhone to a Samsung Android, well, most of the students are gonna say between $1,000 and $2,000 US. Some students say, even Candy, if you give me $10,000 US, I will not switch away because I like the ecosystem. I have continuity of the experience between my MacBook, between my iMac and the iPhone and the iPad tablet. So, and probably even my Apple TV. So I have this consistency. So I have this ecosystem. And that's one of the strengths of the core business of Apple, in fact. And this actually creates also user value, because continuity does not create friction. So this is a value capturing, if not value creating activity in the customer value chain. When you look on the right-hand side, something that I also like to always say is that it's not just the ecosystem, because you have other competitors to Apple who have this ecosystem. But I think what is really unique, and this is why some people look at Apple like a religion and they will never switch away, is really the value they extract from it. They like, I mean, I need to be fair as well, I like the quality and the design of my iPhone, of my MacBook, of my iMac mini. I love the seamless user experience. And then on top of that, the innovative technology. Just going to give a very concrete example. When I switch from I'll call it a Microsoft compatible or Windows compatible laptop, and I had like, in terms of energy consumption, I could have like 3 to 4 hours for an Intel chip, which was an i5 or i7. When I switched to a MacBook Air version 2, I mean, I suddenly realized that in terms of performance, they were very equivalent. And I was having like 16 hours, 14 hours of battery life, which was something I was not used to the Intel chipsets. And this is what happened with the M1, M2, is that they were actually much more energy efficient. So that's actually creating value for the user. When I take an airplane and I fly from here to the US, I don't have to think if I have enough battery in the airplane. I know that I can work without any problem, depending on how intensive I'm going to use my laptop, for at least 10 hours in a row without having to recharge. That's a value creating part in the customer value chain, in fact. And for those who are interested, and it's not a marketing video I want to do here, but one book that I really recommend reading, and some of you have been asking also to share what I'm reading in terms of books and how also I kind of structure my thoughts when I look at businesses and if I want to invest into businesses, I strongly recommend you the book Hooked, which is about how to build habit-forming products. Some people will call it how to create products that create addiction from the user, from the consumer. It's a very interesting book. I really recommend you to look at the book and learn how big companies and even smaller companies, they create those habit-forming products. In fact, and when I say products, it includes services as well. Right, so now, we are still in trying to understand what is Apple and giving you some attributes. So you saw a little bit like what's the core business and how do they lock in? So how do they create high switching costs that users don't want to switch to another platform? And one of the things as well, as we saw, is the design and the quality of the products is actually very high. You pay a premium price for that. That's true. But you get that value for the price that you pay. And you can agree or disagree if you want to pay, I don't know, $1,500 for an iPhone 16 Pro, for example. I don't know the exact prices, but that's kind of the price range that we're in for the latest version. So one of the things, of course, when we look at modes, we want to know is how strong is the brand? How strong is the Apple brand? And you know that, I have been teaching this since 2020, so now nearly more than 4 years, and hopefully soon 5 years, that I like to look at brand strength. And one of the sources I use is the Interbrand Top 100 Global Brands ranking. And there actually, so you have the prompts as always on the left-hand side. We ask VinGPT, do we have any brand-related information? And how has the brand evolved over the last 10 years? And show me this in a comprehensive graph with the axis. I'm going to show this to you in the next slide. So on the first prompt, the first question is, do we have any brand-related information to Apple? Well, you see that indeed Vinge is replying, and remember that I'm always using the demo instance of Vinge, but so in order not to bias the statistics of our production environment. So that's why you may see the pre-production term of Vinge appearing from time to time here. But you see that actually Vinge is saying, yeah, I do have Apple in my investment universe. And related to brand information, actually, it's brand position number 1. And the brand value of 2023 is rough cut $500 billion, and the year-over-year growth is 4.24%, in fact. So you see, and it says also the industry, etc. So Vinge has been trained and fine-tuned with this publicly available information. On the second prompt, which is a more complex prompt, I want to understand as an investor, how has the brand position, the brand ranked evolved over the last 10 years? And I've asked Vince to show this to me in a comprehensive graph with on one axis the brand position and on the other axis the brand value, so in terms of absolute numbers. And you see here the graph, after having submitted the prompt to Vince GPT, you see that it comes up with a graph. So initially I was like surprised, like, okay, there is a flat line. What is this? Well, actually, Apple has retained number one brand position in the world for the last 10 years, according to Interbrands. In terms of brand value, you see that in 2014 it was rough cut at 120 billion US dollars, and it has been multiplied by 3 over the last decade, which is huge. So you see, retained number one position in the world, and the brand value in terms of absolute dollars has been multiplied by 3 rough cut. And this is something that you can ask Vince, in fact. In order to understand the company further, we need to understand who are their largest shareholders. You know that I like to look into that as well. So today, in terms of institutional shareholders, amongst the big ones, you have Vanguard, Berkshire Hathaway. Well, now probably in the next, this is a chart that is a couple of weeks old. Probably now Berkshire probably has been reduced. You have BlackRock, which is, if you know, BlackRock is kind of everywhere. And when we look at individual investors, you still have Arthur Levison, who is the chairman, if I remember well, of Apple. You have Tim Cook. So Tim Cook is one of the largest individual owners, shareholders of Apple. And that may sound funny to some of you. You may remember Al Gore, the vice president of the United States. Well, he owns actually rough cut 76 million. Well, at that time when the graph was created, 76 million US dollars worth of Apple shares. So it was with that a 0.003% individual holder. Why I'm also taking those examples, because I like to look at the board of directors. You remember for L'Oreal, we were looking at who was owning L'Oreal, the family, and then also Nestle being part of it. So it's always good to know who are the shareholders and who is sitting at the board of directors. So you see that Art Levinson, he's the chair since 2000. And you have Tim Cook. So that's typical for US companies where you have as well the executive or part of the executive team, including the CEO, who are in a one-tier board model. So they also are sitting in the board of directors, where in Europe, you very often have a two-tier governance where the executive team is maybe invited to the board, but is splitted actually from the voting people in the board of directors, which are only representing the shareholders. And for those who did the training, the art of reading financial statements, you know that I prefer two-tier governance models than one-tier governance model. But in the US, one tier is really like the standard. You see Al Gore as well. So the former vice president of the United States. So he's a director since 2003. So like 21 years now that he's sitting at the board of directors or in the board of directors of Apple. Now, this is to give you like a sense. So you have seen which are the main products today they sell, the latest innovations, and a little bit what is their, let's say, how they make money by locking in the customers, which is absolutely okay. Now let's look at the financials. So on the left-hand side first, we are October 2024, so we don't have the full 2024 figures. We only have the latest quarter, which I will cover in a couple of seconds. But on the left-hand side, you can actually see that between 2022 and 2023, on a full year comparable basis, that actually the amount of revenue of Apple has come down from 393 billion euros to 383 billion euros. So if you now compare quarter over quarter, and this is actually quarter year to date, which is basically Q1, Q2, Q3 for 2023, and you compare it with Q1, Q2, Q3 cumulated for 2024, well, they actually see that Apple is again having a little bit of growth. So it has added 0.79%. Is this a surprise? No, inflation was very high. So interest rates were very high. So money was becoming expensive. So maybe people were spending less on this type of discretionary type of product, which would be like buying the latest iPhone. It's like, no, maybe, we don't have money for that. Maybe we're going to preserve our cash for other stuff because food and drinks and beverages have become more expensive. But you see that we don't have the Q4 figures. Of course, we will have to wait probably like January, February 2025. But at least on a comparable basis between 2023 and 2024, that indeed the figures have been growing again a little bit, 0.79%. When you look now at which products or product categories are contributing to the 100% revenue, so the top line of Apple, actually the iPhone, and a lot of analysts know this since a long time, so this is nothing new, that iPhone is the cash cow of Apple. So last year, the iPhone contributed to 52.33% of the overall revenues. This is where some people say, well, is the iPhone 14, 15, 16, is it really innovative? What is coming next? Because if people are not buying this, well, actually you have half of your revenues that are going to be declining. So that's a problem for Apple potentially. And I mean, analysts are looking at this as well, and shareholders as well. Then you see, and we're going to cover services later on, but the second largest revenue contributor for Apple is actually the services part. It's in the meantime 22.23%. The wearables, home, and other type of accessories, I have, for example, I don't remember this sound box, how is it called? I think it's called an Apple Pod, if I remember well. I have one behind here. You may not see it with my webcam, but I have one behind. Quality is just fantastic. Competitor is Sonos, for those who know Sonos. And so that's part of the headsets as well, the AirPods, for example, the Apple Watch, that's part of the accessories. Well, in the meantime, the accessories, it's 10.40% of the overall revenue. That's $40 billion per year. The Macintosh or the Mac category is still rough cut 8%, and the iPads alone as a category, so the tablets with the iPad minis, the iPad Pros, etc., represent 7.38, so let's say 7.5% of the revenues. But you clearly see that, I mean, it's the iPhone that today continues to drive half of the revenues and also of the profits actually of Apple. But you see here that, and I'm going to cover service later on, that services actually has been growing strongly over the last years. When you look at geographical origin of revenues, and you know that that's something, of course, that as an investor you have to look into as well, you see that the Americas is basically also kind of bringing in half of the revenues of Apple. And you have China 19%, Europe 25%, because Europe has purchasing power as well, and other countries like 10%. So basically 70, or let's say $3 out of $4 of revenue are coming out of the US, with a little bit of Central and Latin America together with Europe. So those are the, let's call them, developed markets for Apple, in fact. So now coming back to services, that's something I wanted actually to go a little bit into, and also thanks to Adriano because he helped me prepare those slides. So you see here when you look at, so iPhone has been since many years like the biggest part of the revenue of Apple. But what is interesting is the services part. If you look on the bottom right graph, you see that the services part has been, in fact, pretty small. So that's the orange color. So in 2007, it was like 16.7%. Then it decreased to 11.5. 2015, it was 8.5. And again, if you just look at 2007, I mean, the iPhone was not existing because it was the launch year of the iPhone, but Mac was 43%, the iPod was 34%, services was 16.7%, that's probably linked to iTunes, and the accessories 5.2%. And you see how the iPhone, which is now the blue thing, the iPhone has become the cash cow since 2007 for Apple. But you see the services part that it went down. So this is where they were challenged by things like Spotify and Netflix, etc. And now they're coming back. And now the services part represents $1 out of $5 US of revenue is basically coming from Apple's services, let's say, category, in fact. And this is what you see here. So you see what they have started. And of course, at a certain point in time, the store, Apple Pay has contributed to it, Apple Music, Apple TV Plus as well, etc. So you see that, of course, the services have had a steady growth over the last 10 years. I mean, the revenue has been multiplied by 10, to make it simple, over the last 10 years. I mean, I will not go into the details of these slides. I mean, as always, I recommend, if you're a serious investor, read the financial statements of the company. I've just put here, together with Adriano, we have put you here like what we have been extracting for the last, let's say, quarterly report, where you can see, in fact, the breakdown between geographical origin of the revenues and also the product categories of the revenues, which is the bullet point number 3 at the bottom of the slide. Dividend history is also interesting. So until 2012, the company, very honestly, was not paying out dividends. That's typical for growth companies. And now, as they have become much more mature, they started to pay out dividends. Again, just I'll call it, for me at least as a value investor, the current dividend yield on Apple is below 1%. I would not invest into a company that gives me 1% dividends, right? Warren Buffett has been very successful, but the only way for Warren Buffett to make a lot of money, and he did actually make a lot of money, probably has been multiplying by 2 at least between the moment he bought and he has sold Apple. But I mean, he could only rely on capital gains, but there was no real passive income on Apple during that period of time. So for me, the dividend is actually really on the lower side. It's actually even below inflation. And I'm not speaking now here share buybacks, just to give you a sense on dividends. You can, of course, ask Vinch. And here there is a complex graph that also was prepared by Adriano, which is, show me in a graph for the period 2020 until September 2024, the revenue, the net income, and the dividend per share for Apple. And put the dividend per share on the second axis in the graph and calculate the compound annual growth rate for the 3 metrics. Then you see that, of course, the dividend has come down because it has to be split adjusted. But otherwise, the dividend, as you saw in the previous slide, has been growing steadily. And you see it between 2021 and 2023, it continues to grow. But the dividend yield, so the cash dividend per share on the total share price, is actually, for me, just really on the lower side, so below 1%. So I was now speaking about share price. Let's analyze the share price. So in this graph, you see that since 2020, the share price has been increasing. That's why still today, Apple is the largest market cap on the overall, on the global equity market with $3.5 trillion. So it went, actually, I think the peak was close to $240, if I remember well. It came down a couple of weeks ago to below 200. And now it came back to, so this Friday closing of Wall Street was at $226.80, so October 4th, 2024. And this, of course, has been put into Vinch. So as always, you see here on the video on the right-hand side, we are asking Vinch to perform a fundamental analysis on Apple. Actually, now investment news, we have 2 companies that are called Apple, so you need to take the one with the ticker AAPL, which is Apple Incorporation. And you see, in fact, that, of course, as always, Vinch is providing you, first of all, an interpretation of the fundamental analysis with a certain amount of metrics as they are laid down in the Other Value Investing training on Udemy. And then, of course, what we want to do is an interpretation of this. And then we're going to ask Vinch, can you tell me what's the right cost of capital for the company? And you know that Vinch has been trained on, it knows that Apple is part of the consumer electronics industry, and it will look up Aswad Damodaran's database that is published at least once per year. And here you see that the overall industry cost of capital is of 10.13% for the consumer electronics industry, which is clearly higher than 7%. Then what we're interested in, as always, is Vinch calculates the intrinsic value of the company using this cost of capital. You remember the attention mechanism, so it remembers that it's 10.13. I don't have to repeat it. And I said use 7% growth, because I believe that 7% growth is probably something between a very defensive 3% and a too aggressive 10% for the next 30 years. And you see here that Vinch then tells you, well, basically the intrinsic value on dividends is 9.77. That's normal because the dividends are really, really, really low. So basically you could disregard the intrinsic value through the dividend discount model. You may use the Gordon growth model, but still it will not change the story. The 2 ones that I would have to be an investor, I would look into would be the discounted cash flow, IV, and the discounted future earnings, IV. And here it's very interesting because cash flow and net income are very close. So I have a very close intrinsic value with the 2 methods. With 7% growth, 10 or 13% cost of capital, which gives me a value between $132.10 and $139.18. And then I'm asking, of course, I'm just showing you examples of prompts that you can use Vinch to compare with other companies. You could calculate the intrinsic value of Microsoft and Alphabet and then compare those intrinsic values and the safety margin with Apple as well, for example. Here I'm giving an example where we are asking Vinci, can you compare the price to earnings, the price to cash flow, and the debt to equity between Apple and Microsoft, Meta, and Alphabet, and structure the results in a comprehensive table. You see that, we are using VinGPT as a large language model. It will provide you the necessary information. What is interesting here, we'll not go too much into the details. You see that the debt to equity of Apple is a little bit higher with 1.29, while the other companies, specifically like Alphabet, they have a 0.08 debt to equity, so they will not go bankrupt tomorrow. Something interesting as well is to look at what is called in the other value investing training the level 3 analysis. So we want to look at brand strength, we want to look at net promoter score, we want to look at employee net promoter score. So remember NPS and eNPS. eNPS is in the scuttlebutt method what employees, how they feel about the company, and NPS is how customers feel about the company. And you see here the results, and actually I asked Vinci to perform the level 3 analysis for the 4 companies. So you see who the CEOs are, what's the CEO approval rate. So you see one thing, and of course we are relying on external databases. For Alphabet, it still says that it's Larry Page, the CEO. Well, actually it should be Sundar Pichai, but okay. And but nonetheless, you see the CEO approval rate. It's interesting to see, for example, on the CEO approval rate that Meta platform, so Mark Zuckerberg has the lowest CEO approval rate versus Apple, Microsoft, and Alphabet. Does it surprise me? No, it doesn't surprise me, actually, with all due respect for Mark Zuckerberg. And then you see also that the net promoter scores, you see that Apple has, with an NPS of 48, has the highest net promoter score in terms of how customers feel. Will customers be ambassadors of the Apple products? And you clearly see that Apple is really, really very strong. And you see, again, another example that Meta platforms, a lot of customers are not necessarily super positive about the platforms that make up Meta, which is WhatsApp, which is Instagram, and which is basically Facebook. Then last but not least, let's bring all this together. I hope that you're now used to this graph, which is a graph where, again, as an investor, we want to know if the company is overvalued, is fairly valued, or is undervalued versus the current market share price. And I'm using also as a comparison Morningstar. So Morningstar says that, according to them, a one-star price, so a very expensive price for Apple, is above 200, let's say $50 US, 249.75. You have the screenshot on the right-hand side, and Morningstar says that on the cheaper side, so Apple starts to become cheap below 130 US dollars, so 129.50. And they say that today at 226.80, which is the value in Vinci and in Morningstar and on the stock market at any data broker, they say that it's expensive. It's not overvalued, but it's pretty expensive, right? When we put into this graph, into this axis as well, we put the intrinsic values of Vinci, and you understood that dividend, for me, you should not use the dividend discount model here, but just discounted cash flows, discounted future earnings, with the assumptions of 7% growth, 30-year valuation, no terminal value, and 10 or 13% cost of capital. Well, Vinci is giving us, as you saw earlier, 132.10 for future earnings and 135.18 the present value of the future discounted the present value of the future cash flows. So this would be the fair valuation according to Vinci, with the assumption of growth, 30 years, and cost of capital. And having said that, so if you remember, we want to have, or at least if I want to buy into a company like Apple, I want to have the market giving me the company at 25% below intrinsic value. So for me, I would consider that undervaluation would start at around 100 US dollars, where Morningstar would say it's 129, but we're not too far away, actually. What is clear is that with 226 US dollars, I think there is kind of agreement that the stock is expensive. But again, remember that you may want to put in 10% growth and a lower cost of capital. Of course, this will actually push the fair valuation up. So maybe then 226 appears to be cheap, right? So remember that, of course, intrinsic value, it's not a perfect science. It requires judgment. That's why value investing is an art, because it requires human judgment. So as a conclusion, what can we say is that, yeah, I think that Apple is a great company. I mean, I'm experiencing myself Apple products. I really love them. I am locked into Apple. I would not move away for a Samsung Android phone, for example. And as I already said, and that was similar to L'Oreal, I think that using 3% growth rate would really be too defensive. So I think that 7% should be okay, even though you have seen that over the first 3 quarters this year compared to the first 3 quarters of last year, they only made a little bit below 1% growth. But we are looking long-term as value investors. The dividends are pretty low. It's below inflation. So I would never invest into a company that is giving me so low passive income. I would need to focus on capital gains. And I think that even according to Morningstar, but I will at least speak for me, that I believe that currently Apple appears to me overvalued. So I would stay away from it, knowing that on top of that, I will not gain a lot of passive income through dividends. So on the main question that I put in the thumbnail, which is the growth of Apple coming to an end? Honestly, I don't think so. I don't think that it will come to an end. It's clear that there is a certain risk on the business because iPhone represents more than 0.5% of the company's revenues today. Services is growing fast. You have seen that services portion of revenue or contribution to revenue has been multiplied by 10 over the last 10 years. So I think that services will continue to grow. I believe that the Vision Pro, when it becomes cheaper, will become a commodity thing. Some of you may remember the movie Ready Player One, where actually we're getting close to what we see in the science fiction movie, Ready Player One, the Oasis for the French people in the room. So no, I don't think that the growth of Apple will come to an end. But again, I don't like to make forecasts. I'm just giving you here my fair assumption. So with that, thanks for your attention. So if you want to have more information, also how to use Vinci, and you want to subscribe also to our newsletter, go to vincigpt.com. And otherwise, do not forget to subscribe to this YouTube channel. Do not forget to put likes and comments. That will help us also grow the channel as we are growing now the channel. And thanks for all of you who have subscribed in the meantime. And so the next video will be about Nestle, because one of our investors has asked if we could do Nestle from a company analysis perspective. So that will probably be published in like between 7 and 10 days in the future. With that, thanks for your attention and talk to you in the next one.